It can take many decades inside financial markets to understand the Tier 1 charts. They are the charts that move markets. If the Tier 1 charts are starting to show weakness, this should be reflected in the Tier 2 and Tier 3 charts as well. Long-term investors want weakness in the Tier 1 charts because it helps them to just nab the best buying price. Traders also need to understand where the weaknesses are and where the strengths lay inside the markets. And all markets are intercorrelated and interconnected. The most important thing to understand is that price waves are determined by a thing called CTKS structure. In this video, I'm going to go through all these components and we're going to have a look at the cheat sheet which puts all of these charts on one page. Let's run the numbers. All markets, and therefore all charts, are intercorrelated and interconnected. A lot of people say, oh, if Bitcoin and crypto and the stock market, they're all selling down, who the heck is selling? It's really the interdependent nature of financial markets. When we see the potential for DXY strength actually translating into very strong structural support as the DXY has been going nuts, and that's of course taken dollar yen, its little baby brother, with it. This is really bad for markets. It places a lot of stress and strain, especially into the crypto market. That's something that you need to be aware of. And this week, we've got a lot of economic indicators coming out, which will directly impact the DXY and the Forex pairs. The coming week will be quite volatile. There's a lot of FOMC speakers talking, and they could really rattle the markets and push power into the DXY and the dollar-yen combo. That will take away the upward price momentum of the euro dollar and the Aussie dollar, if that happens. If we see DXY strength, we typically see weaknesses in gold and silver, especially if it's accompanied by strength in the US 10-year and the US 2-year. If we start to see risk-off behavior enveloping the markets, we could very well see a spike in the VIX and a very substantial decline in junk bonds. If that happens, all the major market indices will get hit, especially their companion stocks. And of course, Bitcoin and the alts can't escape the stock market's gravity. So if the stock market ends up getting hit, Bitcoin and crypto will be hit as well. Let's look into some specific charts. If you're new to the community, a very warm welcome, and don't forget, smash that like button and please subscribe and turn on notifications. We're going to cover things here that are not covered anywhere else on YouTube. Thank you everybody for your kind comments. We really have an incredible global family. A question for today: where do you think the markets are going for the next 24 hours? I'm really looking forward to your thoughts. The crypto market is incredibly volatile. A couple of days ago, well, 5 days ago, we talked about the concept of up and downwards action. At the moment, at the current time, Bitcoin is retracing, and that's going to pull all of crypto with it. Inside the masterclass, we delve deeply into all sorts of things, and especially global markets. Masterclass students, make sure you look at LV19. We can see the Taiwan market absolutely going nuts on the back of Nvidia at the current time and the AI craze. Bitcoin is also been retracing. When we look at Russia's market and China's market, they're not doing particularly well at the moment. But the Russell 2000 looks like it's about to cut over a resistance and go for it. If this occurs, we would expect Bitcoin to break out to the upside. If the Russell fails here and gets underneath this structural support, it could really sell off. So it's a time to be very aware. When investing and trading in the crypto market, please keep your eye on Bitcoin first and foremost, because the direction of Bitcoin will determine the direction of the alts. You can see here Ethereum. As Bitcoin is moving down, what's ETH doing? It's of course moving down with it. What about Solana? What about BNB? What about XRP? we can see XRP is moving down, but it's got a little bit more strength than Bitcoin at the current time. Doge looks to be flattening out at the current time. This could actually tell us that the Russell 2000 may be on the way to turning around. It's a little bit early yet, but we're starting to see some very early signs of a turnaround inside the crypto market. This is the difference between trading and investing. When you're investing, you're looking at a very long-term perspective on where you get into the markets, and hopefully you're dollar cost averaging in at structural levels. But if you're a trader, you need to see if the market is turning around because you want to hop right on it if it is. Masterclass students refer back to TM6 to look at this chart. When we look at the NASDAQ 100, that blue line is Bitcoin. What is Bitcoin and the NASDAQ 100 doing? They're moving in directional correlation with each other. One thing to note, if you look at the DXY, when it pumps up, especially when it pumps up hard, it tends to bring other things down. Especially if the DXY pump yields come up at the same time. This will absolutely crush precious metals, including gold and silver. You need to be very aware of how these factors impact what you're looking at. There's definitely a lot to financial markets, but in time you'll get to understand, especially if you're doing the cheat sheet, and that cheat sheet is available free from CTKSMethod.org. What I can see here, when I see gold doing something like this, it's actually telling us that the DXY and the yields may well spike. Always remember that smart money profits before any news hits the market. You can see it's important to look at the major market indices. For example, we saw on the NASDAQ, as the NASDAQ was coming down, Bitcoin was coming down as well. This is starting to turn around, and one thing that I see that is potentially quite favorable, especially if it keeps on going and doesn't fail just here, if the Russell 2000 futures just confirm this as support and then start to break out, we could see a mass increase across the board. Just because there's a lot of news incoming about the FOMC and the federal funds rate. Just don't be confused. You have to look at the charts. The news will always confuse people. The charts cannot. The CTKS method is the world's most powerful smart money buy and sell level detection system. Here it's analyzed in excess of 5,200 days. We've seen that we didn't get support and we didn't confirm support at that 64,168 mark. If we can't confirm support here and we did get a bit of a retest, we would assume that this 63,207 mark comes into play. If we can't confirm this is support, we can't move back to the 64,168 mark. A non-confirmation of support would look something like this and would head us down to the 62,613 mark. If we get a confirmation of support around that 63,207, we could very well move up to the 64,168. When it comes to trading and investing with the CTKS method, it's really simple. It's so straightforward. If you can't confirm a structural support, it's going down to the next structural support. If you do confirm it as support, it's going up to the next structural resistance. It's that simple. A lot of people say, I must have certainty. Ken, is it going up or is it going down? One thing that I've learned from nearly 4 decades inside financial markets, if you want certainty, you are certain to lose money. You just must look at the charts and see what they're actually doing. Are they getting across support or are they falling below it? If a price move manages to get above a structural resistance level, does it show any strength whatsoever? Does it show and give you confidence that it can go to the next level, or is it just stalling out because the sellers are seeking to push it down? And the confirmation around structural levels is the key. You can see that Bitcoin failed at this structural level. But fortunately, it's coming into the 63,207 level now. It can be really difficult when you're looking at price. For example, on Ethereum. Ethereum has been trading in excess of 3,000 days. If you were just to look at this, you would try to just draw up support and resistance lines based on recent indicative price, which will RIP your money. Instead, you must look to all of price history to create the most statistically significant lines that you can possibly create. Let's do that now. Let's just pop on the indicator from the service. What you can see here, when we pop on the indicator, there's a lot of overhead structural resistance that ETH hasn't been able to surpass, just in excess of that 3640 mark. When it came down, when it came up to hit here, it couldn't confirm price at this level, which meant it was moving backwards. If it can go up to the next level, that's good. Just remember what's happening with Bitcoin. But if it doesn't confirm as structural support across that level, it's going back to where it came from. If it doesn't confirm here, it's going to the next one. And then you get level and level and levels of safety nets. These safety nets are what rebounds and captures price. Therefore, in a sell-off, you must absolutely know where the structure is. If you don't know where the safety nets are, you don't know where price is going to get caught. Veterans with inside financial markets just simply look at how price behaves. It's only novices who want absolute certainty as to where price is going. And that makes a lot of sense. When people start off, they think it's like a wrong or right answer. And they think that other people can predict these tremendous curvilinear relationships that exist inside financial markets. Don't forget, price is just moving in a wave between structural levels. As soon as it hits the safety nets, it gets rebounded up towards other ceilings above. Just knowing where the structural support and structural resistance levels are, that's your key. That's what you need to be focused on. I'll just zoom into price on ETH just a little bit more. You can see that 3486 level, it just wasn't held. It didn't confirm as structural support. And actually, it sliced under that negative fresh air gap there, foretold quite serious problems because the sellers were just far too strong. And if you've been doing your cheat sheet, you already know that the US dollar, or the Dixie, the DXY, has a lot of positive momentum inside it, and it's likely to just push crypto and stocks down in the coming week. That's not a certainty, it's just a stacked probability. And when we look at this 3420 level, what do we see right here? It's having a tremendous amount of trouble. It has been caught, but that's because it passed through two levels of structural support here, and it found another safety net. The buyers were coming in, and that's actually what support levels do. Buyers are here, sellers are here. What are we seeing right now? It's trying to hold on to this 3420 level, but it's not guaranteed that it will do so. And if it doesn't, where's it going? It's just going down to lower levels, this 3393 or the 3382. If it confirms as structural support here and starts to make its way back, that's what we would look for a bullish case. But a bearish case would be the exact opposite. It undertests and resumes downwards. This is why you must know your levels, especially as the markets get weaker. There's a lot to learn in trading and investing. One thing that you can pick up immediately, look first to Bitcoin. If Bitcoin is coming into a structural support area, especially as it's reconfirmed a negative price momentum, we would expect some slowing down or even partial reversal at these points. That will flow through to the entire crypto market. But the key is, where is Bitcoin going when it gets caught, when it bounces? Does it bounce and form a higher low than what it had previously and seek to come up to the next structural resistance area to flip it into support? Or does it get weaker and start to cut through structural support levels? You must just keep your eyes on these levels. When it comes to liquidations inside the crypto market, we can see about 69 million, and the predominant number are longs. That means that the price is being forced down. But this is not a substantial level of liquidations inside the market. It's really minor. When people first start in financial markets, they want absolute certainty. They want to know where price is going. Unfortunately, financial markets don't work that way. Price, even when it's going up, is going down. You can have a long-term momentum here, but price will go up and down and can go up and down quite substantially inside, especially crypto, but any chart. Even if it's sometimes going down, it doesn't mean it's always going down. It's going down and then up. That's why we use a thing called Borsog, buy on red, sell on green. But of course we know what we're doing. When we look at the 4 stages that all investors and traders progress through to become consistently profitable and to find meaning in life as well. Zone 1 and Zone 2 are highly emotional zones where people focus on certainty. As they focus on certainty with something that's moving up and down exponentially, of course they're going to experience terror because they're asking the wrong question. The wrong question, what is that? What's price going to be? How can you possibly know what price will be if it does something like this? And as there's many time zones all around the world, when somebody says it's going up, it could well be going up, but when you come in at your time zone, it could have been retracing. So just bear this in mind. What you want is a much simpler process. You just need to know where the structural resistance and structural support levels are and how to interpret them. This is true knowledge, and true knowledge is not inside Zone 1, which is the panic zone, or Zone 2, which is the blame zone or conflict zone. Unfortunately, diamond hands tend to lose a lot of money, and it's not about scarcity and win-lose and jealousy and all of those things. It's about learning. And when you get into Zone 3, and you've got to go through Zone 1 to get to Zone 2, and then Zone 2 to get to Zone 3, it's all about patience, probability, and rules. We don't come in like a light switch, just going in and out. We just go in gradually and come out gradually. We have 3-way decisions. We understand the role of percentages. We have patience. We have lots and lots of rules. We know how to make money, and sometimes you just have to wait. But with positive excellence, the thing that just makes life worth living, you get to keep your money. So many people get from Zone 1 to Zone 2 into Zone 3 and continually lose fortunes. Jesse Livermore was one of those people. The key is to actually keep your money and to keep your wealth and keep growing in terms of abundance. Many very smart people that lack integrity, decency, kindness, strength, and boundaries actually end up going to prison because they're doing the right thing, but doing it in a wrong way. You don't want that. You want to make sure that you can make it and that you can keep it at the same time. And when it comes to losing money, don't look at it as an insult. The market is not insulting you. The market is simply a pooling device. The market takes in money from traders, investors, people going long at spot, people using leverage and options and futures and all sorts of things, banks and hedge funds and private offices and retail investors and traders. You can't think for 1 second that the market does anything else than pool money together into one spot and pay people who know and collect from people who don't know. That's it. So if you have the knowledge, if you're doing the learning, you're going to get distribution out of that pool. Your key is therefore on learning as much as you possibly can. And do not learn the retail methodologies. The retail methodologies have you stuck in the certainty zone. And you can tell them, the social influencers are really so good at this. They say, I'm certain I know where it's going. Nobody is certain. All you have is a probability, and a probability is always under a certainty. It's not the same. With the cheat sheet, we can gain a lot more clarity on what's happening. There's a lot of FOMC speakers just talking this month, a lot, and they're going to throw a lot of caution into the stock market. And the stock market, as you saw, will control what happens to crypto. And what happens to Bitcoin, as you know, happens to all of the alts. So no matter what you're looking at, you have to do a very specific methodology. You have to know what's happening to Bitcoin and total if you you're in the crypto market. But the only way to understand that is to know what's happening to the major market indices. The only way to know that is to fill out row 1 and row 2 of the cheat sheet, and also understand what economic indicators are being released, what liquidity is doing, how far the next FOMC meeting is away, what the global markets are doing, how things are moving, how people are getting liquidated, options, expirations, fear and greed, and the latest news. Yes, it takes a while to do, but it's totally worth it because you just gain that Zone 3, Zone 4 edge on everybody else. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.